The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, a whole lot of nothing so far. We're off 1.5 points on the S&P cash. We went up a little higher. Market went sideways. A lot of people in the peanut gallery saying that the market is way overpriced. We knew that for 3 months, so there's nothing new there. But we continue to have diminishing returns to the upside on these bounces. And, of course, yesterday, the energy and just the juice was very light. But, of course, Mondays and Fridays, we're kind of getting that. Anyway, we're pretty much holding the big moves yesterday. You would have liked to seen a little bit of continuation today. If we don't get that tomorrow, then this bounce is somewhat in trouble. But I don't see a lot of people rushing to the doors. We just have 1.7 billion shares on the NYSE, so it's not like we've went up on a lot of volume and then sold off today on more. We just had light up, and now we've got light sideways. And, of course, that's pretty much in all of them. The NASDAQ's off 6.5 points. And, of course, the Dow Jones is off 10. So, we just don't have a whole lot of anything. And, why sometimes nothing is a signal, right now we have a whole lot of nothing. And, a little bit may have to do with the dollar. It's up 0.4% at 93.74. But when you look at the rest of the markets out here, gold's off 11, 12 bucks, silver's off 44, 45 cents, oil's down another 8 cents. Net gas is down 2. There's just not a whole lot of causation and correlation. When you're going sideways, because everything correlates when nothing's moving. So we'll keep an eye on that. But my guess is that we're going to get into some more earnings on Thursday. That's probably going to move this one up. It is options expiration week. I see no sign that this market wants to pull back, but also no sign that it wants to go a great deal higher. Could we get from options to 24.75 or 24.80 on the S&P cash? Yeah, we could. It's pretty indefinite, though. Probably 20 points up or 20 points down from here. So, we'd have to have some kind of surprise. We did get kind of a surprise in Home Depot. We'll talk about that. And what else? Well, let's start this show, get it going, and we'll get into some charts.
And it's all just a little bit of history repeating.
It is history repeating, and on this day in not 2003, it's 1962, actually. What happened here? Guess I'm not keeping up with the ball. 2 days after sealing off free passage between East and West Berlin with barbed wire, East Germans authorities start building a wall, the Berlin Wall, to permanently close off access to the West. For the next 20 years, heavily fortified Berlin Wall stood as the most tangled symbol of the Cold War and a literal Iron Curtain dividing Europe. I think I was lucky enough to be over there as it was coming down, and had a lot of fun watching people had never really had freedom have it. And where we talk about building walls to keep people out, they had to build walls to keep people in. And I think that tells you anything you need to know about communism and socialism, opposed to capitalism. It's a horrible thing, except all the other possibilities. Just the best of something. Anyway, not much more going on out here. As I said, it's kind of a quiet day. We're off 0.5 point on the S&P cash. So why don't we just get started? Now, Home Depot, of course, down. These guys have been sandbagging for a year. And if you're not familiar with the term sandbagging, I will give it to you. That is that each quarter, Apple does this too, by the way. Each quarter they play down their earnings and tell everybody all the bad stuff in the last earnings. And then suddenly they've got a surprise when it comes times for earnings. Well, no one believed them anymore. They sandbagged for probably about the last 4 quarters. So everybody just moved the estimates up, and the stock got way ahead of itself. 156.05 for yesterday's high, down to 148.26 today's high. That's kind of put a dark shadow over a lot of the market. DKS, Dick's Sporting Goods, also another one that took the plunge. A lot of these retailers look like they had a fairly decent possibility of making some kind of significant low. The volume had decreased. You actually had a little increase in Dick's here, but that's basically thrown mud on anybody in that entire sector. And once again, we're in a what can you say? Just in the doghouse for anybody in any kind of retail doing anything. And I think a lot of people are just kind of hanging on there. Although spending has actually gone up and debt has gone up also for many with their credit cards. They have been spending them this year. And of course, on this day, is it, the dollar moving up? Is that kind of trying to keep a lid on the marketplace? I think so. But it's hard to actually know for sure. But it certainly seems like anytime we get to go higher, the dollar starts to expand. Anytime we get headed lower, the dollar goes lower. And it may be the control rods on the nuclear power plant that is the U.S. economy. So what else do we have happening? Well, we'll look at some of the usual suspects. I haven't looked at Gulag in a while, and this thing is kind of bounced off this low. I think we looked at it 2 days ago. August 11th has bounced off the support area. Not much in the way of follow through and not much in the way of volume on the upside yesterday. 1.1 million shares, let's call it that, compared to that August 11th low of 2.7 million shares. So it looks like maybe you're going to get one more chance around 920 on Google. When we come back, we'll talk more, look at a lot of other stocks. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. We were looking at Google up here. It bounced a little energy off this $1,006 high on July 24th. Decent volume. It's a high volume high, so you think that you can get at least a retest of 106. Generally, that you don't make highs, but you did come down on higher volume than that the day after on the 25th of July. So you've got, kind of a conundrum here where you've got two different things. My guess, though, is that you could see this back up at 990, and on light volume, if you were thinking of shorting, that's where that little rascal would be. Let's see, I think this is China Yum. Looking at stocks that could have some big downturns and possible shorts coming up. Yum China got blown apart on earnings back on the 6th of July. Did so with 15.8 million shares. Got into that over the last few days. So you had kind of you got 1.5 million shares, 2 million shares. Today you got 700,000 shares. You're looking for about another 50% more. Normally I like to see these things come back and fill about half the gap that is still existing on these things, because normally if they're going to come back up there, you get one more shot at them. But that's about it. Well, that would be interesting to me, just because so many stocks that everybody says are going to make a lot of money in China never do. They go there and they blow up. Speaking of stocks like that, Starbucks was going to make so much money because of all the Chinese locations that they'd opened up, a couple thousand. This thing's done nothing but head lower since its earning call came out. This one we've been looking for it to come down to $50.09, and I think we could see that. That's a high volume low from November 4th in 2016 with 22 million shares. So far you're coming down. The volume hasn't been all that exciting for the last 4 or 5 days, but I think you've got that low $50 range 50 to 51 bucks. Looks like a pretty high probability that you'll get into that. Okay, stop script. Okay, what else do we have out here? We had, hopefully, my email just quit working for some reason. Can we just turn that off? Come on, Mr. Email, get moving. Okay, how can we do this? Go to our task manager and where's it at? Thunderbird and task. Okay, start it back up. We'll get to our emails here because I was just looking at it. Okay, X-ray and PDCO. Let's go take a quick look at that. XRAY. Take a quick look. Looking for a potential buyout here on dental supply. I think we talked about this. This thing did gap down. It was the loser of the day back on the 9th. Down on heavy volume, 6 million shares. You blew through the previous low that had 5 million shares. And, of course, on the day you did that, you had about 3.4. You've had less volume pretty much through that. Today, not much juice either, 1.8 million shares. But this thing, to really have any kind of bullish signal on it, would need a close back above 54.91. And this thing doesn't look like it's ready to turn anytime soon. Let's go back, take a longer time frame on this one. 53.03 is the low from February 12th, 2016. You're not that far away from that. Maybe you get that test tomorrow. If you fail there, you're going down to 49 bucks. So I think you really need to close back around $50 if this thing gets back up there. But more than likely, you're going to test that February 12th low. And you still need to get back almost 55 bucks to prove this thing is done going down. And I don't see that. So I would rather see this thing pierce 53 bucks, get back above it, and find that that's the low at 53.03. You just haven't done that quite yet. PDCO. Did I put that right? PDCO. Maybe it's PDCO. Okay. We'll go with that. There we go. Patterson Companies. Now this one, you're about about 70 cents high. You're looking at the test of the November 22nd, 2016 low. This thing fell apart on 14.6 million shares. You're going to need some kind of sign, but man, a close below $35.96, or not a close below, but a piercing of that low, and a close back above that low, close back above 36.59 as today. That would be a fairly big buy sign on this thing. The energy, off the last, let's call it 20, 21 some odd days back up to this gap, wasn't really that bad. So this one of the two I like much better. You're close to that low. It is a high volume low, and if the volume is nothing out here. But again, you want to pierce that low. You want to close back above it, and that would actually look fairly good. You got a nice trading range. Of course, if you got long, somewhere around 37 bucks or a little less, your target would be about 45 bucks. So maybe 46, but 45, and then you'd be out of the thing. So not a bad looking trade out there. So thanks, Rose. You're pretty close on both of them. You just need to wait for a signal, and there are not a lot of signals out there coming, which is interesting. So what else do we have? Let's look at a few other stocks. We looked at Yum. wanted to look on a kind of a sideways day, go back out here and look at some of these other ones that we've been looking at, which are Fire Eye. Nothing really happening in that one. And CYBR. Nothing in that. And PAWN. That's PANW. If I can learn to type. There we go. Palo Alto, and unfortunately, it's up on light volume. I would have liked this thing to come back down one more time to 122. I think we might still get that one, but that one does look fairly juicy. Looks like it's made a bottom, had a rally at them, got into that gap above, come back, energy is light, and 120, 122, somewhere in there. It's like a potential buy. Anyway, we'll be back after this short.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And you can give me a call at 877-927-6648. You can email me at path@tfnn.com and put a message in the den. But it looks like it's all quiet on the Western Front. You get my World War I reference. Too soon? Too soon? Okay, so we're flat on the S&P cash. Volume's been coming in kind of late in the day. I did want to watch bring this up. Probably should have done it during the break, but we will find it when this thing does come up. Wait for it. Just seeing if anything else is going on in some of these. Go ahead and look at Apple for real quick. I haven't watched. I knew it was out here making or getting close to new 52-week highs today. And you certainly have that 162.20. That goes up against the one from the 8th, just a handful of days ago, 36.2 million shares. You got 21, so you could come in about the same. It's not going to be horribly bad volume. Apple does tend to get a ton of volume at the end of the day, since institutions do tend to trade it a lot in dark pools and at the end of the day. What I did want to show out here was the total market volumes. Hopefully everybody can see it. But every day in my newsletter, I put in a chart with those volumes, but not only the volumes, but the actual dollars traded. And you can see that yesterday was one of the bigger or smaller days for that. We had only, what was that, $235 billion traded back and forth. The day before, 256 on Friday, and of course on Thursday, 331 billion. But 235 billion is fairly light. You have to go back to the 17th of July to get something that light, and man, we've tied it, but it was pretty light. The other thing is that normally you start seeing light volume, dark pool numbers really come up, and they didn't do much yesterday. But to me, at the end of the day, after that large rally, that you could only get $235 billion worth of cash in was one thing, but even the volume from the NYSE was only 2.8 billion shares compared to Friday's 3.16 billion shares. So if you think things are light, you're right. And the problem with being short light volume and non-trending markets is they tend to go against the shorts probably at least 3/4 of the time, maybe more. So I continue to think that is, why you probably don't want to be long until we get some kind of spike, intraday spike that gives it up. You probably don't want to be short either. So Apple's up on pretty decent volume, but you'd like to see something like 36 million shares. Could you get close? I think you could today, but again, I don't see a whole lot out here that says Apple is ready to go south in any meaningful way. Best Buy, we were talking about retail stocks just not looking good. This one tested a previous high on extremely light volume. Unfortunately, earnings are coming up the 28th, or I'd be short this thing. But with Dick's numbers coming way down, they were selling this thing at the very beginning of the day. My guess is on earnings, this is coming back to 52. And if this fall goes the way I think it is, Best Buy could be back at 36. But the start is going to be pretty much coming up here on earnings on Best Buy. Amazon, of course, after it came down, had a nice bounce yesterday, but not a lot of juice. 3.2 million shares today. Just a little less than 2 million shares, trying to hold that high. More than likely, if you were thinking about going south on Amazon, you'd want something like 1,025, 1,030 on it, and I don't know if you're going to get that to set up the decent risk reward, but that is problematic. What is the energy fund? I was looking at this morning. Pretty nice low volume moves on the Dow Jones Energy Fund. That's the IYE. July 7th, $34.55, 558,000 shares. Today so far, a little less than 200,000 shares. We have pierced that previous low. We are now closing back in on it. I don't see a lot going on other than maybe EIA numbers and API numbers. Would have liked to seen the energy off this last major high in this one, which was July 28th, come down with a little less volume, but it wasn't all that exciting. So I'm not going to scream or yell about that, but certainly I would probably be fairly shy if I was short crude right now and maybe some of the other energy stocks, because this actually looks like they could be coming in, maybe not a rally just yet, but certainly could be getting ready to make a base out on the IYE, which is about 35. Let's take a look at the XLE. Same kind of thing, which you would probably expect. Again, 16 million shares on July 7th. We've got 8 million shares today. It pierced the previous low. It's closed inside of it. Energy, unfortunately, was about the same on the way up to this July 28th high as it was back down to the low today. So you do have kind of a buy signal here on energy, but that's about it. And going into API numbers tonight and EIEIO numbers tomorrow at 10:30 for energy, you got to think maybe you're within a day out here of getting a signal that energy, some of these energy sector stocks may be trying to find a bottom too. What else do I want to look at? NFLX. I've been watching this one come back in. I've been saying that if you're kind of close, you're wanting 167 on Netflix to find a low. You're down on light volume today at 3.9 million shares. That goes back to the August 10th low as it came off with almost 10 million shares. So fairly light volume out here. No real sell signal in Netflix, but you want to be to see that 165, 167 area. We got close, 167.60 on August 10th. Today we got down to a low of 168.25. I just have a feeling on this one you're going to get a little spike and an intraday reversal. And if you thought ever of going long Netflix, not a bad looking retrace to actually buy. Let's take a look at the retrace out here. Okay. Now, one thing that makes this just a little bit better too is that you have a confluence zone at 162 to 160, and you may not get that. But if we were to have a bad hair day in the market tomorrow, this thing blew through all of that. You got 162.30, and the volume continues to be nothing. That is the best risk reward you're going to find on this thing, I think, 6 months. 160.63 is the bottom of that confluence. We'll talk about it.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And if you want a good example of confluence, which is putting together two different Fibonacci retracements, and I think it's probably the best use of Fibonacci's. Certainly you want to look at Netflix. The November 14th low would be the start of your first Fibonacci retracement. The second one, the start would be the 144.25 on July 6th. You use 191.50, which is the July 21st high for both of them. And then you look at the 618 to the 382 of both of them. And if they have a nice, quick, I like to see less than 0.5%, maybe 0.75% of the price as kind of a guideline for how tight that number should be, that area should be. But that is very nice. That's also at the very bottom of this gap up back on the 18th of July. And to me, could you get back in there? You certainly did. What you don't want this to do, though, is break below that 160.63 and not pop back above it by the close of the day, or to pierce it and come right back up the next day and close above 160.63. But since this one's a little bit more volatile, you may actually get that. But I'll be watching that one kind of closely. Not a lot of these stocks have good confluence levels. But if you haven't read Tom's book on trading, The Art of Timing the Trade, the late one, you probably want to get it and take a look at these, because we're probably going to start setting up a lot of these positions with any kind of retrace if we continue to have days like we have over the last few ones where light volume up. You're going to start seeing where these retrace levels come back in, and that's one of the more bigger and more beautiful of the bunch. Take a quick look at Microsoft to MSFT. Okay. Please do the Netflix style look-see on ALB. Are you, I guess the question is, you want to go in depth on how this looks for lithium-ion batteries? Is that the deal? I'm not exactly sure on the question. Maybe they can tell me. Or maybe a pullback? Oh, retracement levels. Okay. Well, certainly you don't have the same thing on this one. Let's see if you got anything else that pops up. I mean, you're kind of at a more minor one, but these like this one I'll show here. This one has 108, let's call it 108.90 to 112.21. That's a little wider than I like. When they start getting wide, they start acting as congestion areas. But this one actually is showing a fairly decent low out here. What was that, 108? 108.80, 108.60. Is that right? Let's zoom in here a little closer. 108. Yeah, 108.80. So, yeah, that one's not a bad one. The only thing I dislike is it's a little wider than I would like. But, man, that came to the penny on that one for a confluence level, 108.60, 108.80, and 20 cents lower. Spiked in it and it started going up. I don't see a lot of juice in this one, though. 1.6, 600,000 shares today. But if you are long this thing or trying to make a trade, a pretty good risk reward, because you're either going to be out of this thing at 108 with a close below 108.80. So you know your risk reward set up on ALB. I don't want to even start to pronounce it, because last time we had 15 different pronunciations of that company. That would be it. But yeah, doesn't look bad on a confluence level. I just would like to send that area. You know, that one's $3 wide, $2.50 wide. Normally, like I said, you want maybe 0.75%. So you're looking for 75 cents to maybe $1.25 wide on those. They, like I said, they normally you just rocket out of those things when they're real narrow. They either bust or they move very quickly back up. And on this one, they do tend to act when they get wider as consolidation and congestion zones. That still may be a pretty good buy, but it just means that sometimes you have to wait a few days before it starts moving on. Okay, so we looked at that one. Let's take a quick look at Intel. Man, were they all over this one this morning. I'm not exactly sure why. I didn't see any news on it. Down on 14 million shares today so far. That goes back to the 11th when it was down on 19.3 million shares. Could you tie it today? You could, but doesn't look like a lot more energy coming back in that way. Did we look at Microsoft? I think I typed it wrong and then something else happened. You had a nice pop yesterday in Microsoft with some decent volume, almost 20 million and 100,000. Today, you're kind of doing a little reversal, but just 8.8 million shares so far. So coming back on about half the volume so far. Maybe you get 2/3 if you're lucky today, but not a huge sell-off in that one either. Let's take a look at some of the other ones. Let's take a quick look at the IBB. Haven't seen this one after the downturn. Again, this one had a fairly decent level for Confluence. We were talking about that one last week. But another good example here, Confluence on the IBB came in at $300.67 to 303.68. Got to 304.04, which is just above it, started to bounce. This is pretty good. This one comes in somewhere around the 1% area for range, maybe closer to 3/4. But you're going to probably, if you were short this thing, you probably need to think about using these as targets for getting out of the shorts. This one looks like it's bounced, but not that much. And you're probably going to get an opportunity right at $300 on the IBB. So if the next week or two, maybe the end of August, you get a little bit, one more pullback, this thing is not going to look that bad at $300. You had a sign of strength and a breakout above $300. That goes back to the 21st of, what is that? The 21st of June? Yeah, 21st of June. You're kind of coming back into those candles. That was what, 5 million shares that day compared to 1.6, and today 1.1. So not looking all that bad out here. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And yeah, what we have going on out here. Okay. So, well, that is kind of interesting on the IBB. Now you guys got me wanting to do a scan tonight and look for confluence levels. So I may do that, run through some of them. It takes a long time, though. It's one of the longer time scans. Again, if you want to look at some of these, you can get kind of nice setups on them. But this is kind of what I'm looking for. Like on Vail Resorts, this one looks like it's going to fail on volume. You just had 300,000 shares as it broke through the June 2nd high at 215.82. Did so, 1.75 million shares. And of course, yesterday, as you broke it, you had less than 300,000. Today, 150,000. So even if you're long these things, you probably want to keep an eye on it. But again, this is one of these ones that has a beautiful setup for a Fibonacci confluence level. And that is this 205.39 to 205.84. Both of those actually looking fairly good. Let's see. Okay, got on there. Okay, see if there's anything else. But that one's perfect. 205.84 to 205.39. That's less than $1 on a $205 stock, and that gives you a very good risk reward. Again, these things can get pierced intraday, but if they're going to work, normally they get pierced, and you close back above that level the same day, and that acts as support. This thing, I wouldn't be long this thing, but if you had been long, wouldn't mind ringing the register, hoping for a pullback to that 205 area. But there's a handful of ones to start looking at if you're thinking this market's ready to roll, and where these things could possibly come back to before you have support. In the meantime, sell when you can, not when you have to, and we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.